While many have heard the tale of Ebenezer Scrooge,
Humbug.
few know of his other encounter with ghosts in Australia in 2014. When Scrooge considered hiring a financial advisor, he was visited once more by the spectre of his dead, but still very annoying, business partner.
Not you again.
Tonight you will be visited by 3 ghosts who will help you choose a financial advisor.
I don't need their help.
You think that, but in 2011, when ASIC studied advice given to retirees, they found
39% was poor, 58% was adequate, while only 3% was good.
Despite that,
86% of customers thought they were receiving good advice.
Oh, he looks horrible. How did he die?
he's not dead. He just works for ASIC.
And so it came to pass.
I am the ghost of financial advice past. Recent past. In 2008, the system was rife with commissions.
This one is best for you. This one is best for me.
That scoundrel.
And the more they convinced you to invest, the more commissions they got.
So should I invest more in this?
Yes, I think that would be good for you.
And the commissions continue to be paid over the life of the investment.
Around 3 million Australians were paying commissions and fees to advisors they weren't even in contact with. Some financial advisors were being paid by hundreds of clients without actually doing anything for them.
I just don't have the time.
So what happened?
Well, several companies like Storm Financial collapsed.
Oh, that's horrible.
Yes, thousands of Australians lost their money and even their homes.
No, I mean that.
Then in 2012, Parliament passed the Future of Financial Advice Laws, FOFA, to protect consumers.
Oh, so it's all fixed. Is it fixed? Come back. Oh, God, I hate ghosts.
But there were more policy poltergeists in store for Ebenezer Scrooge.
I am the ghost of financial advice present.
So you're just the same ghost with a beard?
It's never happened with Dickens. Come on.
So those FOFA laws, is everything fixed now?
Well, some things have got better, but the industry has changed. Now over 80% of financial advisors are owned or controlled by AMP and the Big Four. Yes, the Big Four.
Hang on, aren't you supposed to be a ghost?
Oh, yes, I am. Ooh. Anyway, the thing you gotta realise is that AMP and the big banks mainly flog you their own products. One ASIC study found...
Brains!
The other one.
Oh, AMP advisors recommended AMP financial products in 93% of cases.
And the products might not seem like they're from the same companies because they've all got different brands, whether they be life insurance, superannuation or share packages and other investments.
Fine. I'll just use an independent financial advisor then.
Well, good luck finding one, because advisors controlled by the banks don't necessarily promote their allegiances. Take Financial Wisdom, for instance. On their website, there's a lot of...
Wisdom is discovery. Wisdom is knowing. Wisdom is a journey.
but very little about them being a...
Wholly owned subsidiary of the Commonwealth Bank.
In fact, all the banks and AMP have aligned advisors that trade under different logos and names. And we mean a lot of names. Here are some of AMP's.
Yeah, but so what? Are they selling bad products?
Yes! Oh, no, not at all. As a matter of fact, they mainly sell the same products. But you've got to remember that their companies make more money if they can get you to invest in their products.
You should invest in shares or increase your life insurance. How about a margin loan?
Shouldn't I pay off my mortgage first?
You're such a Scrooge.
Are you really on my side?
Actually, since the FOFA laws, he actually has to act in your best interest.
Oh, did you feel that? Something terrible just happened.
What's wrong?
It's like I have to suddenly care about you.
Of course, that doesn't mean that they can't think that one of their products is in your best interests.
This is a great product for you.
So if you want them to consider a broader range of products, you need to ask them.
Is it better than my industry super fund?
Oh, see, this is good. Now he's got to justify his product over the industry super fund, which generally have higher rates of return.
Like, let me... Oh, you look at that. Look at the time. I am late for golf. So...
And Another thing FOFA tried to do was phase out commissions.
Oh, hooray.
With a few small exceptions. Life insurance, you can still get commissions of up to 30%.
Please, somebody save him. He's my meal ticket.
And advisors can still be paid in parties too. Some property investments can also attract commissions.
You're alive. You should celebrate by investing in a Gold Coast apartment.
And they still have asset-based fees, where your advisor gets paid a certain amount based on how much you invest in a product. Now, you might think that sounds like a commission, but I'm sure you'll understand the important legal distinction if you just analyse this diagram.
Okay, I understand that, but why are we at a school?
Oh, I've got to pick my kids up. I was hungry.
So how do I know if these commissions are actually being paid?
Well, once a year you'll get a fee disclosure statement, which doesn't actually have to disclose if you're paying commissions.
Oh, hang on. Aren't commissions fees?
No, they're very different. See? But once every 2 years, you're meant to get a letter which not only shows you all of your fees, including the commissions, but also gives you the option to opt in if you want to continue to pay these fees.
Humbug. Okay, so under these FOFA laws, the financial advisor has to act in my best interest. I will at some point get told what commissions are being paid, and I can opt out. That sounds pretty good.
There's just one problem.
What? Oh, ghosts!
Yet Scrooge's regulatory nightmare was about to get even more confusing.
Ooh, awake, Scrooge. I am the ghost of financial advice future.
Ooh, ow! You think I like this? I thought ghosting was all nude pottery with Demi Moore. Now get up, we're going to the future. Sorry, future's this way.
Wow, this is different. The new iPhone's got a bigger screen. So what else has changed?
Well, remember those laws they had that were going to change the industry? Well, they wound them back. First, they got rid of the opt-in letter.
Can you imagine? They wanted me to write to my clients every 2 years. What a hassle.
But you don't mind continuing to charge me all the time.
Oh, yeah, I'm happy to do that. That's no hassle at all.
So how has that change good for me?
Well, that's less mail every 2 years for you and bigger boats for me.
But doesn't he have to act in my best interests?
Yeah, they watered that bit down too.
A really big boat.
It used to be a general obligation, and now it's like a 5-point checklist.
Maybe I'll have to go without the helipad.
But a 5-point checklist, that's still going to protect consumers, right?
To be honest, no one really knows.
But you should know. You're the ghost of financial advice future.
Yes, recent future.
They also allowed commissions for general advice so that bank tellers could upsell you bank-owned products, but only if they don't take into consideration your actual financial circumstances.
You mean I'll be able to get advice that doesn't take into account my personal objectives, financial situation, or needs, which pushes the product of a bank so that the teller can get a commission, and all of that for free? Wow!
That sounds really hard to justify.
Oh, it is.
They're broadly about making sure that staff in banks are able to recommend, I'll have to rephrase that because it's actually legally incorrect. Please don't use that.
See, staff aren't recommending products. That would be illegal. They're just giving you general information that might guide you towards some of their employers' products, which is totally legal.
So they're allowing commissions that customers don't know about. Isn't that the sort of thing that caused these problems in the first place?
I don't know. I'm not the ghost of financial advice past. Hang on. How can you see us?
I see dead people and dead financial reforms.
And with that, the curiously detailed financial policy-based haunting of Ebenezer Scrooge was complete, just as his annoying but dead business partner had foretold.
What a nightmare. Now what am I doing today? Definitely cancelling that.
No, Scrooge. The right financial advisor can be helpful. You just need to be careful.
The Financial Service Ombudsman has tips for dealing with people like that. Like take notes of all meetings and conversations. This can be crucial if there's ever a dispute. Make sure the statement of advice actually reflects the advice you asked for. Ooh, and keep asking questions until you understand.
Why have you got your fingers crossed when you say low risk?
And if you're still concerned about conflicts of interest, then the Independent Financial Advisors Association ensure their members have no link to product manufacturers, receive no commissions, and no asset-based fees.
Something is desperately wrong.
Why doesn't everyone just use them?
Because they've only got 9 members. But there are a growing number of firms that will just charge you a direct fee for their advice, and then any commissions or asset-based fees will be handed back to you.
Does that mean that they charge me more?
Not necessarily. Although ASIC says that good advice may cost between $2,500 and $3,500 a year, which may be...
What? I don't have that kind of money. Why didn't you tell me that at the start?
Bah, humbug.
What a Scrooge.